Hi there, this is Aman Kapoor, and I would like to talk about individual life insurance and talk a little about joint life insurance and kind of highlight a few differences between the two, very basic differences between the two. And all I want to say is that this stems from uh, a very popular question that we as insurance and investment consultants we come across. We very often come across this. Most conversations actually relating to insurance usually start as, and I would like to have an insurance policy that would take care of me and my family, or I would like to take care of, I would like to have a policy that covers me and my spouse. Usually, that is how most of the conversations about life insurance, that is how they start. And what is important to remember is that in the process of answering this question, we need to, at least it's very important for an advisor to then quickly get to a point where the difference between individual life insurance and joint life insurance is explained. What is an individual life insurance policy? It covers the individual alone. And what is a joint policy? It covers two people. So, in an individual life insurance, let's say you have a husband and a wife who would like to get insurance for themselves on their lives. So, in an individual life insurance policy, you have coverage for the husband, and you also have a coverage for the wife, and they both are independently covered. So both have insurance on their respective lives, and if something happens to the first individual, there's a payout to the beneficiary, tax-free, for the amount that is insured on the policy. But the coverage on the spouse, on the survivor spouse, remains. So he or she will still have insurance on their life. So that goes on. Whereas in a joint first to die, husband and wife typically are jointly covered for an amount. So if it's 500,000 in a joint first to die, what truly happens is that they both are jointly covered for $500,000. So if the first person, and when the first person passes away, there is a payout to the beneficiary of $500,000 tax-free, and the policy then comes to an end. The cost between, if you put together, if you add the cost of two individual coverages on the husband and the wife, if you add that amount, it would be about 15 to 20% more expensive than the joint policy, again, give or take, for the same amount and for the same duration of the term. But that's obviously for an important reason. The cost is higher simply because the individual policy covers two lives and it has two payouts, and therefore the amount of the coverage is also almost double if you really come to think of it. So the pool of benefit is twice as big as the pool of benefit of the joint policy. The joint policy will come to an end after the first payout. However, there are many companies out there that offer certain additional features like option for conversion or being able to get some amount of insurance, and one can talk about it in more detail. I look forward to speaking to you. Please feel free to contact me. My information is present wherever you're seeing this video. Thank you, and I hope to talk to you soon. Bye-bye.